that I'm in a negative downtrend area. When I am in an area of resistance, I am likely to experience a downtrend and for a reasonable period of time. Now, for most securities, and if you read any kind of an investor trading book, this is what they'll tell you. SMA is roughly right for high volume stocks close to 97% of the time, if you strictly follow SMA and use it well. I'm in an area of resistance. I downtrend. At some point, and it is an inevitability if the company's not going to die, I'm going to break back into a new support level for a trading decision, not for an investing decision, but for a trading decision. Right here, as circled, that is an indication when I break through my support level, my resistance level, that I'm breaking into support, an indication of a time to buy. All right, well, now that I've broken through my resistance level, I've found an area of support. And like it said, that suggests a new price channel direction. Right? My price channel here is likely to now increase. Right? And right here, I have a period of consolidation. Doesn't really increase or decrease, but I hit my SMA line right here and verify or confirm my support. It continues to go up. Right? And that is how the SMA works. That's how support and resistance works in this context, and it'll appear differently in all others. Right? For instance, right here, I'm not going to explain it fully, but this baseline between the positive volume and the negative volume, that is support and resistance. When I break through it, I'm going into support. When I break beneath it, I'm going into resistance. Right? That's what's essential to understand.
Yeah, I'll just repeat a note that he kind of talked about 30 seconds ago. Make sure you know that support and resistance applies to everything that we're going to be talking about today, every single indicator. Right? It's very important to keep those indicators, right? But the support and resistance apply to those indicators in mind. It's important to keep support and resistance in mind always.
So there'll be 4 different strategies that we talk about today. Right? SMA, even that little explanation that I gave right there, is honestly almost enough to understand SMA. That'll be the first one that we talk about. The second will be volume weighted price average, or average price. That's VWAP, more commonly referred to as. And then we'll talk about moving average converging diverging index, or the MACD, and then Bollinger Bands, right? Bollinger Bands. That sounds kind of boring, I would imagine, all these different technical terms. But when you're talking about the potential of making money and establishing financial independence and using these strategies in a back-tested way to know, well, I've done enough back-testing to know that my application of an SMA or a moving average converging diverging index is going to make me money 95% of the time, and I can try to cut my potential to lose money that other 5% of the time. It then becomes exciting, right, when you're making money. But first I'll talk about SMA. SMA is quite literally the easiest technical indicator to use. It is just a reflection of exactly what you think it would be, the moving average price of any stock or financial instrument, right? It's calculated right there by adding the stock's price over a certain period of time and dividing that by the number of periods, right? So let's say hypothetically, this right here is a 20-day 1 hour chart, right? 20 days of economic activity, each candlestick is 1 hour, right? If I have an SMA, and it's called a 50-period SMA, that means that I'm thinking of the most recent 50 candlesticks, which each are 1 hour's long duration. So the most recent 50 hours of the moving average price of a stock, giving me an indication of where my general support line is over that period of time, my general resistance line is over that period of time. So it represents your support and resistance levels. I explained this earlier. When I'm breaking above, I'm in a channel of an uptrend, right? I'm in my support. It is essentially pushing it up, is what you can imagine it to be in some kind of a theoretical sense. My support line for my simple moving average is pushing the price up. Whereas when I break beneath my simple moving average, in a moment, as exemplified here, the stock price is being pushed down in a resistance level. I have a negative weighted average for my price. Volume is likely negatively influencing it. In my technical indicator, all it does is explain what's happening to me. It's my job to interpret that, but it explains what's happening to me in a technical sense, what is technically happening to market price action. Because if you ask me right now, Louis, do you know how to interpret what's happening in the price action of any given stock? No, and nobody here does. Ray Dalio, one of the greatest hedge fund managers of all time, has no idea why what is happening is necessarily happening intraday or intra-week or every month in a stock price. It's dependent on an infinite number of things. The job of a technical indicator is to show you what is likely to happen and the technical reasons why, right? And that's what the SMA is doing here.
Yeah, so now we'll be talking about VWAP. This is actually very, very similar to SMA, so don't overcomplicate your thinking too much on this. So all the VWAP is it's the average price adjusted for the volume over the day. So the VWAP line, usually there's just one line, not three, but I'll be explaining those as well, it's just the average price over the day, right? And then the upper line represents the 75th percentile of price action over that given day. And then the yellow line right below represents the 25th percentile of the average price during the day. So basically what that means is that when it's below the middle line, it's trending down comparatively compared to the average, right, of the stock price during that day. Conversely, if it's above the middle line, then that means it's trending above what the average price is during that day. And of course, it can act as support and resistance. Okay, so another thing that I think is really important to talk about here is the fact that institutional traders, especially with these really large companies such as Apple, Facebook, Microsoft, Amazon, so on and so forth, they will, with their clients, they'll say, we want to get out near the VWAP line, the middle VWAP line, because for whatever reason they want. That's where the most shares are being traded, right? And they'll guarantee to their clients oftentimes that they'll be able to get out near the VWAP lines, right? Because that carries a little bit less risk. And for that reason, around the middle VWAP line, essentially, there's usually a lot more potential for there being a little bit of short-term volatility, right? Which is why when you're trending, when it's trending, above or below the VWAP, there will often be confirmations of support and resistance around that area. So it might be getting close to the VWAP line and then bouncing off because those institutional traders are saying we want to get our people out of their position right now. I think here's an example.
So yeah,
it's pretty good.
Now talking about support and resistance makes this pretty evident about what's going on. We just talked about SMA. We looked at the line there. We understood what was support and what was resistance in that context. It is incredibly similar, like Nick said, to VWAP. The only difference is that it's taking into account the volume in a given period of time. Now, there are many reasons why that might be important. It's especially important, I think, when talking about will your order get filled? If I put in a request, if I have $100 million in a fund, if I put in a request to buy a certain number of shares, is there even the volume for that stock or the financial instrument that I'm trying to trade that would allow me to get that order filled? If I'm trying to buy $100 million of a company that is only worth $500 million, it is highly unlikely that I'm going to get filled, right? It's almost guaranteed that it won't, unless 20% of people are offering up their shares to sell at that price, right? That's not obviously an issue for people like us who are not trading with $100 million at this point in time. It is likely they'll be trading with $1,000, with $5,000, with less money than that, $500, right? That is what we're more accustomed to. So it doesn't hold as much weight there, but what is important to understand, something that hasn't been defined yet, is that VWAP should only be used, or should primarily be used, for day trading. It's only true intraday, right? Because what the VWAP tells me is that when I'm beneath my middle line, I am beneath what the average expected price movement for that stock or financial instrument is expected to be for that day. So let's say the average